as I have already taught you in the last video. So we are going to continue with our ranges. As we already have our ranges, we have what we call the discount and premium levels. Okay, let's just continue with our video. We have what we call the premium and discount levels. Premium and discount levels. Premium and discount levels are these in bracket. You can call them the PD arrays. Sorry, they are called the PD arrays, and in most cases these are you always see these on charts. They indicate them as PD arrays. Okay, we have PD arrays. Now, what are the PD arrays? These are the levels where we always wait for a reaction on the market. Assume we had our range here. Let's assume this was our range. Let's assume this was our range. Okay, assume we have our ranges there, from here to there. Okay, let's assume this is our range. If this is our range, let's do it very well. If this is our range, okay, we will have what we call the premium and the discount levels, as I told you about premium and discount levels earlier. Okay, what are premium levels? Premium levels are these levels above 50% retracement levels. I told you last time about the Fibonacci. We have a Fibonacci retracement tool, and which we use to measure these. We always use a fib to measure these points. Okay, we have this tool called the fib retracement. This tool called the fib retracement. You will come and drag it from here. You will drag it in this way. Sorry, I've flipped it. My network is disturbing. It's somehow disturbing me. Okay, it's disturbing me. The network is disturbing me, sorry. So let me draw here our Fibonacci. We have the Fibonacci tool. I'm going to show you how to set it and how to use it very well. Okay, my network is kinda slow. I'm sorry for that. I'm apologizing for that. But it's going to be stable. It's going to stabilize, and we continue with our video. Okay, we shall just continue with our video. Now you will come and tap into this tool and go to settings. You tap these buttons and go to settings. At settings, you'll go to style and scroll down. You have the levels that we need and levels that we don't need. Okay, so on our Fibonacci, we'll come and tick this 0%. We'll tick 0.61. Let's untick 0.38. We'll tick 0.61. That is 0.60. We'll tick 1 and we'll tick 0.5 and 0.23. Enough. These levels are enough for us. Okay, now when the market retraces, it will always retrace 50% and below. If the market is above 50%, just know those are premium levels. On those levels, we are looking at sales. and when it is below 50, we are looking at buys. Okay, so we have our premium levels here. These are the premium levels up there, above 50%. These will be the premium levels. Those are the premium levels, and below 50 are called the discount levels. Are we together? Let me hope we're on the same page. What do I mean by 50%? 50% is this line. 0.5 is the 50% line on our Fibonacci. Okay, so anything above that line is in the premium zone, and anything below this line is in discount zones. So let's apply this to our charts and see. Okay, let's apply this and see onto our charts. So here we have our range. We have a new range here. Okay, this market came and swept the previous high, and it broke the structure. Okay, so let's use this high as our, let's use this high. Sorry, my network is disturbing me. Let's use this high and I show you. Let's use this high as our, and drag our tool here on that high and this low. Okay, on this high and low, we will see that the market reacted into these places, and they are key points where the market was reacting from. We'll come and drag, we'll drag our Fibonacci here, drag it through. Okay, we'll just drag it through. You'll see how these levels hold the price. These levels always hold the price, and the price always respects these levels. Okay, so you'll drag your Fibonacci onto these lines, onto this trend, and you'll see how the Fibonacci works and how it is always respected in the market. Okay, sorry, the network, but it's here. Okay, you can see we have dragged that line, and you can see that here this is our 0.2. The market tried to retrace down, but it did not break through this line. Okay, you all see it here. This is where the 0.21 line was. Okay, this is the 20%, 21%. Here the market, it's 23%. The market did retraced on that line, and it acted as a support level to make the market go to the higher. Are you seeing here? This is what I mean. Okay, now it worked as support for this market to go up. The market went up and it retraced again. After going up, it went through the 50% retracement line, and it tried to retest back to come back down, but the 50% line did not allow it to go down. I think you can see this. Sorry if you're not seeing. Someone has told me that is not seeing, but sorry, the network, maybe it's the network. But I'm sure it's going to work out. Let me check. Let me turn on my Wi-Fi very clearly. Okay, I think now we are on the same page. I think we are on the same page. Okay, now the market came, it retraced on this 23%. It went up and broke through these two lines. Now on trying to retrace the 0.5 line has hold this market, and I'm sure it's not going to pass through that 0.5 line. Instead, it will do something like this. It will just retrace here and goes. After retracing here, it will be hold, and after being hold, it will just turn back like this. The market is going to move from here and go break through here. It's going to break out. It will just break out that line. Okay, hope you're seeing how the Fibonacci holds the market. Are you seeing it? Are you seeing it clearly? Okay, the market will be held by the Fibonacci levels. These are the Fib levels. They are key points always on the Fibonacci, where IPUDA always keeps the points of money, the liquidity points. Okay, so when the market retraces, it's looking for something. It's just looking for something from those levels, and then it's be supported or resisted. Are you getting me? It will be resisted or supported. Now you can see here, the market went up. After retracing on this line, it tried to go. Let me show you clearly. Let me delete this. It tried to go back here. It tried to go back, but this next line resisted it, and then it turned down here to get more support, to gain more power, such that it can break through that line. But it's not an easy joke. Remember, this is a daily time frame. Okay, this is a daily time frame. It has spent days. It has spent 1, 2, 3 days so far trying to break through that line, but it's not breaking. Okay, so it will have to struggle to break through that line, and after breaking it, it will go for the next line, which is up there, the 100% line, and it will break through. It will cause a change of character, or it will change of character, or just strip liquidity and comes down to the premium zones. It will come back to the discount zones. So this 0.5 line is for buyers. So in these places, on this point, we don't think of selling. Now here we'll be looking for buys. Okay, don't think of selling. We'll be looking for buys, only buys. But if the market is up in the premium zones, we'll be looking for sells. Are you getting me? If the market goes to premium zones, we'll be looking for sales. Okay, let's meet in the next video, please. Let me not make longer videos, but if you have not understood the video, just repeat it. Play it again and again. You will understand what I've been teaching. Okay?